Bitcoin is green today, but the real question is whether this is the bottom or just a relief rally after a very aggressive weekly sell-off. Monday, June 8, 2026. Like and subscribe for daily market updates. Today's agenda: the daily bounce, market snapshot, last week's pain, the big picture, why green today, is this the bottom, what analysts say, investor action, 72-hour watch list, closing summary. Now let's look at the specific numbers for the last 24 hours. Welcome back to Market Pulse Daily. Crypto is green today, but the real question is not whether Bitcoin bounced. The real question is whether this is the bottom or just a relief rally after a very aggressive weekly sell-off. Bitcoin is trading around the low $62,000 area. Ether is around $1,650. The total crypto market is back near $2.24 trillion, but investor mood is still in extreme fear. ETF flows are not stable, and the big picture economic backdrop is still difficult. So today's briefing is about one question: is this the start of a recovery, or only the market taking a breath? We need to look closely at the numbers to understand what is really happening under the hood. The market is showing signs of life, but we must be careful not to confuse a pause in selling with a permanent change in direction. Investors need to understand that a single green day does not fix all the underlying problems that caused the decline. We have to wait and see if buyers can sustain these higher prices over the next few days. Let's dive into the data. Now let's explain why the market dropped so hard last week. Let's take a snapshot of where everything stands right now. The crypto market is positive today. Bitcoin is roughly in the $62,500 to $62,600 range, depending on the data provider and timestamp. Ether is around $1,650. CoinGecko shows the global crypto market cap around $2.24 trillion, up about 1.4% over the last 24 hours. With roughly $90.9 billion in daily volume, Bitcoin dominance is near 56%. Ethereum dominance is just below 9%. That tells us three things. First, buyers are defending the market after last week's forced selling. Second, Ether and selected altcoins are bouncing faster than Bitcoin, which is normal in a relief move. Third, this is not yet broad evidence of a new bull trend. In a confirmed recovery, we would want to see better ETF flows, improving investor mood, falling yields, a softer dollar, and stronger follow-through above resistance. We do not have all of that yet. For example, the dollar index is still firm at 100.0, and the 10-year yield is around 4.58%. These numbers mean that available cash in the market is still expensive to borrow, which makes it harder for risky assets like crypto to rally strongly. Investors need to watch these macro numbers closely because they act as a ceiling for how high prices can go today. Now let's look at the bigger picture over the last year. From yesterday to today, the key change is that panic selling has slowed. Bitcoin moved away from the sub-$60,000 danger zone and traded back above $62,000. Ether also recovered from the area that had pushed it toward a 14-month low last week. But the bounce is happening after damage, not after a clean consolidation base. That distinction matters. The weekly picture is still weak. CoinMarketCap's June 7 snapshot showed Bitcoin at about $63,239 and down about 14% over 7 days. Ethereum was around $1,686 and down nearly 16% over 7 days. CoinGecko's Bitcoin history shows the move from roughly $71,360 on June 1 to about $63,255 on June 7. That is not a normal quiet decline. That is a market reset. The borrowed money reset was also important. CoinDesk reported that nearly $1.84 billion in borrowed money positions were liquidated in 24 hours earlier in the week, with long positions absorbing most of the damage. That kind of liquidation event can create two very different outcomes. It can clear borrowed money and create the conditions for a tradable bounce. But it can also reveal that large buyers are not yet ready to absorb supply at higher prices. This is why the phrase "bottom is in" is still too strong. A bottom is not just a green day. A bottom is a process. It usually requires forced sellers to exhaust, borrowed money to reset, large buyers to return, and price to hold higher lows. Today checks the first box. It does not yet check all the others. Now let's explain why prices are green today. Over the last year, the crypto story has changed. Reuters reported that Bitcoin has lost around 40% while U.S. semiconductor stocks have surged about 170%. That matters because capital is not disappearing. It is rotating. Investors who once used Bitcoin as the high beta expression of risk appetite have been moving toward AI, semiconductors, and high-profile IPO themes. CoinGecko also shows the total crypto market cap down roughly 35% year-on-year. At the same time, Bitcoin dominance is still high, while stablecoins have become a larger share of the ecosystem. That means crypto is not simply in a broad speculative melt-up, it is more selective. Capital is defensive inside crypto and more opportunistic outside crypto. This rotation is a critical detail for investors to understand. It shows that money is not leaving the market entirely. It is just moving to different types of assets that look safer or more promising right now. If you are an investor, you need to realize that your money might be moving from crypto into stocks that make computer chips. This is a structural change in how investors think about risk. It means that for crypto to recover, it needs to prove it can compete with these other high-growth sectors. Until then, the market will likely remain volatile and sensitive to news about technology and artificial intelligence. Now let's discuss if this is truly the bottom. There are four main reasons for the green candle today. First, Bitcoin held the $60,000 area. That level is psychological, technical, and important for investor mood. Second, forced liquidation pressure has faded compared with the worst part of last week. Third, some traders are buying the dip because investor mood is deeply negative. The fear and greed index is at 15, which is extreme fear. Fourth, the market is trying to price whether the worst ETF outflows are already behind us. But the ETF data do not give an all-clear signal yet. Farside's Bitcoin ETF table shows a small positive day on June 4, but then a $325.7 million outflow on June 5. Reuters also reported more than $2.7 billion in net outflows from major Bitcoin ETFs in the week to Thursday, bringing 2026 net outflows to about $3.1 billion. That is not a stable institutional bid. It is still a warning sign. Investors need to understand that institutions are still selling. This means that the big money is not yet ready to push prices higher. They are waiting to see if the market can hold its ground without their help. If they start selling again, prices could drop quickly. So while the market is green today, the underlying support from big buyers is still weak. Now let's see what other analysts are saying. My base case from the data is this. Today's move is a relief bounce and early stabilization, not a confirmed bottom. The positive on prices argument is clear. Investor mood is extremely depressed. Bitcoin defended 60,000. Borrowed money has been flushed. The market is no longer falling vertically. If Bitcoin can hold above 60,000, reclaim the mid-60,000, and attract renewed ETF inflows, the probability of a tradable bottom improves. The negative on prices argument is also clear. The trend is still damaged. ETF flows are still inconsistent. Bitcoin is still far below its 2025 highs. The dollar is firm. US yields are high. The Fed rate outlook has become more in favor of higher rates after stronger US labor data. That matters because crypto is behaving more like a high beta available cash in the market asset than a clean, safe place to store wealth. So the answer is not yes. The bottom is in, and everything goes up from here. The more disciplined answer is, the market may be trying to build a bottom, but confirmation is missing. The difference is important. A bottoming process can include several green days, failed rallies, retests, and lower unpredictable price swings before the real trend changes. Investors should not get caught up in the noise of a single day. They need to look at the bigger picture and wait for confirmation that the trend has truly reversed. Now let's summarize what investors should do next. Forecasts are unusually divided. CoinGecko's 2026 forecast summary shows negative on prices Bitcoin targets around $60,000 to $65,000 and positive on prices projections from $189,000 to $250,000. That range is very wide, which tells us analysts are not looking at one clean scenario. They are debating whether this is a late cycle breakdown, a big picture economic available cash in the market reset, or a deep correction inside a longer institutional adoption trend. Reuters adds another important point. Bitcoin is no longer the only high beta story competing for capital. AI stocks, semiconductor ETFs, and upcoming megacap IPOs have been attracting investor attention. If that rotation continues, Bitcoin may need stronger crypto-specific triggers to regain leadership. For investors, the message is simple. Do not confuse a green day with a confirmed trend reversal. A bounce from fear can be tradable, but it is not the same as a durable bull market signal. The key is whether Bitcoin can hold higher lows and whether institutional flows stabilize. If someone already has a long-term crypto allocation plan, This kind of environment may be a candidate for gradual accumulation, not aggressive all-in buying. The reason is that prices are lower, investor mood is depressed, and borrowed money has been reduced. But the risk is that big-picture economic conditions remain tight and ETF outflows return. For shorter-term traders, the market is still headline-sensitive. A break below 60,000 would likely damage investor mood again and put the 50,000 to 55,000 area back into discussion. A reclaim of 65,000 to 66,000, supported by positive ETF flows and improving breadth, would be a much better sign that buyers are regaining control. Now let's look at the 72-hour watch list. For investors, the message is simple. Do not confuse a green day with a confirmed trend reversal. A bounce from fear can be tradable, but it is not the same as a durable bull market signal. The key is whether Bitcoin can hold higher lows and whether institutional flows stabilize. If someone already has a long-term crypto allocation plan, this kind of environment may be a candidate for gradual accumulation, not aggressive all-in buying. The reason is that prices are lower, investor mood is depressed, and borrowed money has been reduced. But the risk is that big-picture economic conditions remain tight and ETF outflows return. For shorter-term traders, the market is still headline-sensitive. A break below 60,000 would likely damage investor mood again and put the 50,000 to 55,000 area back into discussion. A reclaim of 65,000 to 66,000, supported by positive ETF flows and improving breadth, would be a much better sign that buyers are regaining control. This is not personal financial advice. The practical framework is: scale slowly, avoid borrowed money, separate long-term conviction from short-term trading, and do not let a single green day override risk management. Remember, the market is unpredictable. Always have a plan for what you will do if prices drop again. Do not try to time the market perfectly. Instead, focus on your long-term goals and stick to your strategy. The market will eventually find its way, but you must be patient and disciplined. Now let's wrap up with the closing summary. Here is your watch list for the next 72 hours. Bitcoin must hold above 60,000 and attempt to reclaim 65,000 to 66,000. Ethereum must show whether the bounce above 1,650 can hold, or whether Ethereum continues to underperform Bitcoin. ETF flows are critical. Watch whether the next prints reverse the June 5 outflow or confirm continued institutional selling. The dollar index and U.S. 10-year yield are important. A stronger dollar and higher yields usually tighten available cash in the market for crypto. The fear and greed index must improve from extreme fear to support, but not prove a bottoming process. Liquidation levels are also important. Avoid assuming borrowed money has fully cleared until open interest and funding normalize. Macro headlines like U.S. inflation data, Fed commentary, oil prices, and global political risk can all affect crypto available cash. These are the things you need to watch closely. If any of these break, your strategy needs to adjust. For example, if the dollar spikes, crypto might drop. If the Fed says they will raise rates, crypto will likely struggle. You need to be ready for these changes. Stay informed and keep your risk management tight. The market moves fast, and missing a key signal can cost you money. So keep your eyes on these metrics and be prepared to act. Here are the final takeaways for today. Crypto is green today because selling pressure has paused. Bitcoin defended the $60,000 area, and traders are reacting to oversold conditions. But the stronger conclusion is not that everything will now go straight up. The stronger conclusion is that the market has entered a bottom check phase. A real positive on prices confirmation would require three things: Bitcoin holding higher lows, ETF flows turning consistently positive, and big picture economic pressure easing through lower yields or a weaker dollar. Until then, this remains a relief bounce with potential, not a confirmed new bull leg. For investors, the opportunity is that fear is high and prices are materially lower. The risk is that available cash in the market is still tight and institutional flows remain unstable. The next 72 hours matter because they will show whether today's green market has real follow-through or whether sellers simply paused before the next test of support. Remember, patience is your best friend right now. Do not rush to buy everything at once. Wait for the signs to align. The market will tell you when it is safe to go all in. Until then, stay cautious and protect your capital. We will see more clarity tomorrow. Crypto is green today because selling pressure has paused. Bitcoin defended the $60,000 area, and traders are reacting to oversold conditions. But the stronger conclusion is not that everything will now go straight up. The stronger conclusion is that the market has entered a bottom check phase. A real positive on prices confirmation would require three things: Bitcoin holding higher lows, ETF flows turning consistently positive, and big picture economic pressure easing through lower yields or a weaker dollar. Until then, this remains a relief bounce with potential, not a confirmed new bull leg. For investors, the opportunity is that fear is high and prices are materially lower. The risk is that available cash in the market is still tight and institutional flows remain unstable. The next 72 hours matter because they will show whether today's green market has real follow-through or whether sellers simply paused before the next test of support. Remember, patience is your best friend right now. Do not rush to buy everything at once. Wait for the signs to align. The market will tell you when it is safe to go all in. Until then, stay cautious and protect your capital. Thanks for watching Market Pulse Daily.